Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with James Sowers, a Forbes Top-50 angel investor. James, thank you for joining us.
Great. Thanks for having me.
Well, we had a previous interview a while back in which we talked about the blockchain space, and glad to have you back for a follow-up. Can you give us a short update about yourself and what you've been doing since that interview?
Sure. I've been investing in a number of different companies, some of them in blockchain, some in other areas of tech. Going a little bit into the cannabis CPG space. Since we last talked, there's been 8 exits in regular companies because obviously in ICOs, when they do an ICO, it's kind of like an exit. But it's interesting too, because even in the ICOs, some of the companies that released the token never put it on an exchange. So I would say that doesn't count as an exit, but obviously the exit rate on that was very high. And I've also started speaking at some different family office conferences and working with some corporations just to educate them more on blockchain and also talk about like what is real and what's not. So what I mean by that is it really realistic? Because a lot of these great things, great innovators that are coming out and saying we're going to do this with blockchain, this with AI, a lot of it will happen someday, but it doesn't make sense today for many reasons. Maybe it would cost too much capital. Maybe it's not the team to do it, or maybe the technology just isn't there today.
Well, that sounds great. Well, if you look at blockchain, what particular subsector are you most passionate about today and why?
Well, I work with a company called Doc.com that's in the healthcare industry, and they have a free telemedicine app. I'm really passionate about something like that succeeding because what they're going to do is right now they're going to hash information on the Ethereum blockchain, but the Ethereum blockchain really can't scale and handle that kind of network type actions. They're going to build their own blockchain called the Life Chain. And, with free telemedicine, that can touch a lot of lives. They're already in a number of countries. And I'm looking for founders and things that can touch the world that basically have massive network effects. I mean, I'm kind of passionate about like the network revolution, I call it. Everyone just talks about network effects. But I look back at history. Like I think that like the network revolution actually started with the printing press and then goes all the way to blockchain now. And then we'll go into the next phase.
That sounds great. So what particular sectors are you avoiding? Where do you think are the challenges today in some of these blockchain sectors?
Like not necessarily just in blockchain, but I kind of think that late stage has kind of become a little tricky with a lot of landmines. So basically with late stage companies, the valuations have gotten really high in some cases. Like for instance, I think the company Juul was trading on a secondary market of about $320 a share. And now I'm seeing it being offered at $90 a share. And this was only a few months ago. And I think all of that is because of the vaping incident. But really common sense has to come into play because some of the valuations of some of these private companies that are excellent companies are like 2 times of a publicly traded comp. So does that really make sense? And for a while, people were getting away with it, but now you see great companies like Peloton and Pinterest go public. And Pinterest was doing well for a while, but now I think reality has set in, and the public comp makes the price should probably be a lot lower than the trades. And Peloton is basically traded straight down from the IPO, even though it's a great company.
So you've seen a lot of companies and have passed on many as well as invested in some. What company do you regret not investing in, and why didn't you invest in it at the time?
So this was back in the 2018 time, like I would say probably the middle of 2018 or summer of 2018. So I had talked to Lambda School from Y Combinator, and it seemed like coming out of there, the valuation was kind of high. But looking back, I mean, now the valuation is multiples of that. So I kind of regret not investing in there. And it was pretty obvious that the founder was the kind of person that gets things done. And a second company, BlockFi, which is in the blockchain space, the founder actually had approached me at a kind of like a meetup type thing, but he hadn't left his previous job yet. So he was still at the other job. So I had ended up passing on that, but I could tell when I met him that it was a smart, determined guy. So I kind of regret those 2. I mean, it's still kind of early, so we don't know what the final outcome is. But so far, those are the 2 that I definitely would regret.
So what was your best experience with a startup? What did you really enjoy working with on these days?
Right. So the best experiences is out of about 80 companies is, the ones that are really doing well is seeing the founder growth from the initial time you invested till now, seeing the vision come to life in different ways, some of them in ways you thought, some of them in ways you didn't think, and then just having the privilege of being part of the team. So that's kind of a rewarding thing.
Well, that's great. So what was your worst experience with a startup?
So the worst experience isn't necessarily the startup's fault or the founder's fault, but just not necessarily understanding the way some of the safes would convert and with convertible notes, certain drag-alongs. And those are things a lot of people didn't see coming. I mean, I'm even seeing things in the press where well-known top-tier firms had got involved in safes, and it's not going to turn out the way they thought because no one understood really all the language of the safe.
And so what happened with the safe note? What was the glitch in the note that surprised people? You talked about drag-along rights, and did the safe note not convert, or did it convert and take them when they didn't want to go? Or what was the detailed issue there?
Well, the one that's out in the public, and I can't remember the company's name offhand, the guy has never had to raise money again. So he issued the safe note, and the company's basically a unicorn. And I guess there was a lot of he said, she said that are not going to convert the safe. So what happens if they go public, or if there's some kind of exit that doesn't trigger it? But I guess he's never going to go public, because I guess if he go public, that would trigger the safe. But even then, there's now arguments whether or not it would. But I actually invested in a company that got acquired and was on a safe, and the acquirer doesn't want to convert the safe. So I know some people are pushing back. I'm just sitting back to see what happens. I have a feeling, because I started reading it very carefully, that we're just going to get our money back when it could have been a good exit. Because if you really read the fine print of the safe, I don't think that the acquirer can actually say, you get nothing, that they're just going to have to give everyone their money back. It could have been multiples, the exit.
I see. Well, I guess that's the downside of safe notes. I think the original intention was to simplify it down so it was less legalese and less issues with it. And of course, simplifying it down cut out probably some key provisions that would have helped with the conversion in this case.
Right. And I think also the safe note was made originally by YC to make it easy for the founders, so they didn't have a lot of legal expense. And it was very simple. If you want to invest, here's a subscription agreement for future equity. And then when it comes time for the price round, which have seemed to go longer and longer away than they used to be, because back in the olden days, the price round was much quicker. Now Series A's are getting put off further and further away, and there's like 3 or 4 seed funding stages.
I see. So going back to the blockchain space that you work in, what are the challenges today in this space? We've moved on a while since our last interview, but today, what are the regulatory, technical, or market challenges you see startups facing with their blockchain startups?
Yeah, I think there's been a lot of regulatory issues because even the regulators don't really know the rules. They're kind of making them up as they go. But I've always said, rule of thumb, if you follow old securities law, you probably are in good shape. But now the blockchain is moving into other spaces, just like the way that Uber had moved into the taxi space, where there was old rules, but it's a new technology, so nobody really knows what the new rules are. It's a lot of gray areas. But even worse than the regulatory thing, because I think that's going to play out eventually, is a lot of the technical stuff. No one has solved the scalability of most of the blockchains. And a lot of the great things that founders and visions they have that probably will come to light someday could be 5 or 10 or 20 years away. And if you wanted to do it now, it could cost billions of dollars to actually make it come to light. It's just like people don't understand that with the Bitcoin blockchain, being open source, it was a computer science miracle, but we don't even know who invented it. It could have been computers. It could have been a team of people. It could have been governments working together. It could have been anything. And if you had to do that without open source yourself from scratch and just even build the building blocks and then open source it, that could take hundreds of billions of dollars. And Bitcoin also didn't have competition when it started. It was around for a good 4 or 5 years before anyone even really took notice. Now there's tons of competition. So the price of hiring the top blockchain developers has gone through the roof.
This is interesting. It's interesting to see the market mature here and give more competition and more tools out there in the marketplace to make that, of course, a better solution. If we're reusing current tools, that's a lot cheaper than having to build everything from the scratch. I think some industries grow very well because there are standards and standard platforms upon which you can build your application without having to reinvent all the infrastructure. And it seems like blockchain is getting into that place where there's enough standard platforms out there you can put an interesting application on top and grow it without having to build it from everything from the ground up. Are you seeing any standards emerge at this stage?
Well, I think the very, very basic protocol layer is there, but I still think that we're very early. I've heard on CNBC in the media, certain people say, oh, we're at the 1994 level, the way the internet was. I think we're actually earlier than that we might still be in the 80s. I was reading somewhere that the internet's been around for like 50 years, but, it wasn't really known to the general public for a majority of that time. And I think in the blockchain space, we're still there. People are hearing about blockchain now, and a lot of people have heard of Bitcoin, but a lot of individuals on the street think Bitcoin and blockchain are the same thing. But the one great thing was that Libra did was it brought out to the public the notion of cryptocurrency. So now I've got people interested. So now, the Congress is interested and all the regulators are really listening and taking notice. And a lot of people in the world that wouldn't even have considered crypto as being legit are taking a look. So I think that's a really good thing. And another good thing is Facebook with their money is going to lay a lot of the groundwork and the framework that hasn't been laid.
It seems like the cryptocurrencies are becoming a little bit more mainstream to the average person. It's becoming less of a scary thought and becoming more of an interesting tool for doing different things. Payments and store of value and other applications are becoming standard. It seems the governments, country of France and China and US, are of course looking at that very carefully and very wary of it. I think France actually forbid the use of Libra because it was potentially challenging their sovereign currency as well. What's your take on the government groups coming into the world of crypto and blockchain?
So I think that the thing with Libra is a lot of them are afraid that Facebook has so many users that Facebook would be like their own country and be more powerful than them and actually threaten reserve currency status even for the United States. They might think, I'm not sure that it could actually do that, but they would see that as a threat. But I actually think that governments eventually will adopt and have their own cryptos. So basically, like there's talk of a Fed coin someday. And I don't think they could use the Bitcoin blockchain, though, because the Bitcoin blockchain isn't really that good for payments because it's not fast enough. And the scalability level isn't really there. And then there's also the program layer isn't really there on Bitcoin. Now, there are people that said, at one time you could build dApps on Bitcoin. And I know there was a company that was trying to do that. But most of that had moved to the Ethereum blockchain. And the problem with Ethereum is it isn't scalable. So the problem with that is we still need to come up with a system that is more centralized, even though basically most crypto people wouldn't like me saying this. There has to be some level of centralization. So I look at it this way, that Libra is actually centralized, even though they claim to be decentralized. But the network is distributed by the nodes. So the governments could issue their own cryptocurrency and have different banks and different agencies as the nodes. So it'll be distributed, but the government would still be the central party.
I always predicted that the successful use of blockchain would be not just solely blockchain application, but more of an enterprise application in which one of the components might be blockchain. I think in the initial round of blockchain applications, they literally put everything into blockchain, which made it very expensive and hard to build. And then blockchain wasn't the best tool for every part of the application. It's good for decentralizing and encrypting and storing key vital information, but the rest of it can be done with just standard off-the-shelf enterprise software. And it would be a hybrid approach to begin with. Do you see anything like that forming at this point?
Right. That is one of the bigger problems, that the blockchain, its very basis, is just a slower database that adds friction, but has specific use cases, if used correctly, that can be very useful, like certain supply chain management and things like that. But I have noticed that like Microsoft and Oracle now have their own blockchain divisions the same way IBM does to kind of give an enterprise software, enterprise solution to companies. And I actually think that those type of companies, with the amount of money they have and resources, are best suited to have that type of thing. I actually have a theory that I call them the big four control the tech ecosystem: Microsoft, Amazon, Google, and Facebook. And the reason I say that is because Amazon has the AWS, which they sell to the startups. Microsoft has Azure, and Google has cloud. And then Facebook is where everyone does their ads. So basically, the startup ecosystem has helped propel the big four to make them even bigger. And it also drives up the cost of things, too.
That's a good point. So as you look at the blockchain, you mentioned supply chain. I think that's a pretty good sector getting a lot of traction with blockchain. What other applications do you think are good opportunities to pursue for blockchain?
So I think in theory, identity is very good application, but it has to be done in a correct way, because a lot of people run around saying, and people don't like me saying this either, they run around claiming, the blockchain's immutable, let's just do identity. That's not 100% true. It depends on what type of blockchain. Even in proof of work, which is technically a blockchain cryptography-wise with the math, a 51% attack can overtake it. We always wondered what would happen. And it was in the news for like a short period of time. The Ethereum Classic had a 51% attack. And then they kind of shut up and didn't talk about it anymore. So we don't really know all the behind the scenes details with that. But I think if it's used correctly, maybe with biometrics or something, that with a blockchain, if you can identify you like proof of identity, if somebody can come up with a true proof of identity protocol that verifies you're definitely you, maybe it's via biometrics, and then it stores that information in the blockchain, That would be one way to do identity. And in a lot of countries where they don't have social security numbers, you would have blockchain identity. I think even in the United States, a lot of people don't like this idea either with Andrew Yang and the universal basic income. I think that there could eventually be a universal basic crypto where everyone gets, but I think it should be $3,000, not $1,000 in a certain crypto, but they can only spend it on certain things that are like necessities of life. And then maybe a certain portion could be released with a stable coin that you could change to regular Fed coin and then buy discretionary items. But I have a theory in the future, once AI gets better with technology, that housing, food, and transportation, the cost will deflate so low that with a universal basic income, people will be able to pursue the things they like to pursue, like art, music, or something they're passionate about, or other things that people are passionate about that I'm not thinking of. And the only issue I see with that, though, is people will get the malcontent in their head. Like they'll be like, oh my God, there's trillionaires out there, and we're getting this money from the government with universal basic crypto, but envy comes in because they're jealous of people that have trillions of dollars. But on the flip side of that, I think it would eliminate a lot of crime. Like I grew up poor, I was an orphan, and I knew a lot of people who did things when I was a child would not have done them if they would have had the basic needs of life met. I mean, some of them would still go wrong. There's always a percentage of people who wind up going the wrong way, but most people never make it out of what I call kind of the hood, and very few do. And it's kind of, I think it'd be interesting to see if more money was given towards education, changing the school system and giving people like the universal basic crypto to learn and become what they want to come, then they could become self-actualized. And that might eliminate some of the envy.
I agree. I was impressed with Andrew Yang's UBI proposal. I was always curious as to how he got to $1,000 and why he thought that was going to really pay for any meaningful amount of your expenses or anybody's expenses. And I think that was a little bit of a challenge people had, is they didn't see that was really going to be the safety net that they really needed. It has to be, like you say, 3,000 or some level a little higher because of the way things cost these days. But I thought that was a good point. Putting it on crypto would make it a really interesting way to deliver and track and ensure it goes to the right purposes.
Right, because you could track on the blockchain how it was being spent, and it was being spent in the right places. And I even had this theory you could issue a blockchain phone, and maybe the technology isn't good enough yet, but eventually everyone will have an Android phone. It'll basically be free. I know in like some countries, almost everyone has one. They're like 10 or 15 bucks. And you could distribute a blockchain type phone that would be government issued, where they could track. I mean, I know a lot of people don't like being tracked, but you could track the universal basic crypto and how it was being spent, and even block it from being spent in certain ways. You could even have different types of universal coins that could be used for different things, like one for food, one for housing, one for transportation, one for education. There could be different ones.
That's a good point. There's quite a number of applications you can use with the blockchain for delivering and securing those kind of payments for sure. Well, in the last few minutes that we have here, what else should we cover that we haven't so far?
I think one big problem out there that people don't address is the low to zero to negative interest rates. I think it's causing super haves and have-nots. I know the politicians like to run around and say, shame on these billionaires, they're evil now, and all this zero interest rates has only helped them. But I think that it's actually the super haves and have-nots has spread to everything, to the stock market, to startups even, because now you have some startups raising billions of dollars and some can hardly raise any money. And then you also have the S&P 500. Now, 5 companies are 20% of the index. And I think that could become an enormous problem someday, because now it's not only the people just investing in index funds causing momentum, but you have all the mutual fund managers that want to keep their jobs are now mirroring the index. I call them closet indexers. And indexes drive sentiment in the world. So, when the stock market's going up, people think everything's good. So if it's only 4 or 5 companies that keep rising, there could be like, say, 40 or 50% of the index actually in a bear market, the individual companies, but no one realizes that because the index keeps going higher. And then once I call it the poop hits the fan, when there starts to be selling, if the startup boom ends and then like Amazon isn't getting all the income from web services and Microsoft from Azure and Facebook's earnings start falling because they're not getting the ads and Google because of the cloud, if those 4 companies start selling off, which is 4 of the 5, I think the other one's Apple, then the indexes start dropping, and then selling begets selling because then the quant traders and all the algos start selling, people start hitting the futures, and just all kinds of things like that happen, and it kind of becomes a cascading effect. I mean, I don't think we're close to that yet, but nobody knows what the pinpoint is or the trigger. But I think it could be something as silly as that causes a major sell-off. Because I actually think that we're in a secret recession that nobody really sees. Like certain parts of the world or certain sectors are in recession, it's kind of like a rotating bear market.
When people talk about the end of the business cycle coming up, expansion's coming to an end, it always happens at this point. And in fact, we're way past what historically it should be for a growth economy. We had the downturn in 2008 and then the growth back up from that. But eventually it's going to come to an end. And it seems like we're seeing signals for it as well.
Yeah, we're definitely seeing signals with the yield curve inverting, which they say takes between 18 months to 2 years for the recession to actually show up. And I wonder, too, with the Fed, they keep doing things like putting billions of dollars into the repo market. It's like they're just trying to keep the party going any way they can.
Yeah, a lot of political motivations going in there as well, trying to keep the economy up for the next election and so forth. But good catching up with you today. How best for listeners to get back in touch with you?
Yeah, they can find me on Instagram. I think my handle is at JJ Sowers, and then on Twitter at Primal T. And if they want to go on LinkedIn, but if they want to connect or send a message, they heard me on the podcast and reason for connecting, because a lot of people try to connect now, and a lot of it is just like spammers trying to sell you stuff now. So I'm kind of more careful about connecting with people.
Very good. Understand the issue there, and we'll put those in the show notes and hope to generate some quality connections for you. And thanks for joining us, and hope to have you back for a follow-up soon.
Great. Appreciate it.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.